All right, let's dive in. If you're looking to grow your business, making that first hire is a huge milestone. But as you probably guessed, it also comes with a whole new set of rules. So in this explainer, we're going to break down employer taxes, using official IRS guidance to give you a super clear and simple roadmap.
So you're ready to expand the team. That is awesome. It means your business is taking off, you're creating jobs. It's a really exciting time. But bringing on that first person, well, it's about a little more than just finding the right talent.
Because the second you hire someone, you've unlocked a brand new role for yourself. You're not just the boss anymore. Congratulations. You're now a tax handler for both your employee and the government. But hey, don't sweat it. It's way more straightforward than it sounds, and we're going to walk through every step together.
So here's our game plan. We'll start with what your new tax role actually is, cover the first steps and paperwork you need, then get into the rhythm of the payday cycle, talk about reporting, and then we'll wrap it all up with the key takeaways. Sound good? Let's go. Okay, first up, let's really get our heads around what this new role is all about. It's a fundamental shift in mindset, really. You're not just running a business anymore, you're also acting as a fiduciary for the government.
You know, the IRS has a really powerful way of describing this. They call them trust fund taxes. And that's because the money you withhold from an employee's check for things like income tax, Social Security, and Medicare, well, it never actually belongs to you. Not for a second. You're basically just a trustee, holding that money in a safe place before you pass it along to the U.S. Treasury. Getting that idea down is absolutely key.
Okay, so before your new hire even sets foot in the door, there are a couple of foundational things you've got to get sorted out to make sure you're ready for tax compliance.
First things first, you need an EIN, or an Employer Identification Number. Think of it like a Social Security number, but for your business. You absolutely, positively must have one to report employment taxes. You can't just use your personal social. And the great news? You can apply for one completely free, right on the IRS website.
Next up, and this one is critical, you have to know for sure. Are you hiring an employee or an independent contractor? For the IRS, it all boils down to one word: control. If you control what work gets done and how it gets done, that person is an employee. If you only control the final result of the work, they're likely a contractor. And trust me, getting this right from the very beginning is so important, because misclassifying someone can lead to some really serious tax problems down the road. All right, our foundation is set. Now let's talk about the essential paperwork. This is the stuff you need to handle on day one to get your new hire set up correctly in the system.
There are two forms that are completely non-negotiable for every single new hire. First is the Form I-9. This is where you verify their identity and confirm they're legally allowed to work in the U.S. Second is the Form W-4. This is what the employee fills out to tell you exactly how much federal income tax to withhold from their paycheck. It's your job to make sure these are filled out and you keep them safely on file.
So with all that onboarding done, we can now get into the ongoing rhythm of being an employer. I call it the payday cycle. This is the core loop of your tax duties. So every single payday, you're going to withhold a few different taxes. Federal income tax, which is based on that W-4 they filled out. Then you've got Social Security tax at 6.2% and Medicare at 1.45%. But, and this is a big but, as the employer, you also have to pay a matching share of Social Security and Medicare. So it's not just their money you're handling, it's your contribution too.
You know, this whole process really boils down to just 3 simple steps. Every payday, you withhold. Then you deposit that money with the government. And finally, you report everything you withheld and deposited. Withhold, deposit, report. That's the cycle. Let that be your mantra.
Now, when it's time to actually deposit those taxes, you can't just mail a check. Federal tax deposits must, and when I say must, I mean must, be made electronically. The government's main system for this is the Electronic Federal Tax Payment System, or EFTPS. It's free to use and it's mandatory.
So how often are you depositing? Monthly? Semi-weekly? Well, the IRS actually sets your schedule based on how much tax you've paid in the past. The magic number is $50,000 in a look-back period. But here's some really good news. As a brand new employer, your past liability is 0, so you automatically start on the easier monthly deposit schedule.
Okay, a quick word of caution here. You do not want to be late on these deposits. The IRS is very, very serious about this. And why? Because remember, it's their trust fund money. The penalties start at 2% for being just a couple days late and can shoot up to 10% or more pretty fast.
This is one penalty that's really easy to avoid just by being organized.
All right, let's move on to the final piece of our payday cycle puzzle, reporting. This is where you basically summarize all of your withholding and deposit activity for the government so they can check your work.
Your year's going to get into a nice rhythm. Your main form is the 941, which is the employer's quarterly tax return. It's due at the end of the month that follows each quarter, so April, July, October. And then you've got the big one, January 31st. That's when you have to file your final 941 for the year and give your employees their Form W-2.
Okay, deep breath. We have covered a lot of ground. So let's pull everything together and just summarize what your most important responsibilities are. But before we get to our final summary, here's one pro tip that will save you so much headache down the line. Good records are your absolute best friend. The IRS requires you to keep all of your employment tax records. So that's your 941s, W-4s, proof of deposits, all of it for at least 4 years. Keeping these organized and ready for review is non-negotiable.
And here it is, your entire job in a nutshell. Get your EIN before you do anything else. Handle the I-9 and W-4 on day one. Withhold the right amount of tax every single payday. Deposit that money on time using EFTPS, and file your quarterly and annual reports accurately. That's it. That is the core of being a compliant employer.
So we've laid out the entire roadmap, from getting your EIN all the way to filing those W-2s. As you can see, the process is clear and the rules are totally manageable. The only question left is, what's the very first step you're going to take to get ready for your new hire? Thanks for tuning in.